Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. We are about to go through what I consider one of the most fun, entertaining, and surprising sessions each week. Millennial Mike goes through and gets your questions, your hard hitting, your funny, your important questions, and we go through it. So, Mike, what do we got this week?
Yeah, so we have a whole host of different topics as well as a bunch of videos to react to. And as always, the videos are going to come in separate videos. This one, we just go through the comment section of your YouTube videos and we create this Q&A. So topics we're going to cover today are institutional investors and the housing decline, picking a market, how to set rental rates, lawsuits, doom and gloom, and that the numbers don't add up. Oh, and last but not least, we might end on a good note, so stay tuned for that. Mike, if you're ready, we can jump in with the first question.
I look forward to this week. Let's see what you got.
Okay. So the first question is about institutional investors and the housing decline. So Hank Duncan says, hey, Mike, do you think the level of institutional investment into real estate now versus the 80s will play a role in this housing decline? There are quite a bit more investors now compared to then, right? And you did have a response. I'll give it to you. You said most institutions are buy and hold, which puts a floor under housing, in my opinion. But can you elaborate about the differences between now and
Yeah.
then?
Yeah. So when I read this question, and it was a really good question, I think it was a he, right? He's absolutely right that institutional buyers are much more enforced today. And a lot of that is actually thanks to Warren Buffett. Warren Buffett was interviewed famously on CNBC, and he said something like, hey, if I could buy every foreclosed home at scale, I would. And basically, he was saying he's too lazy to implement new systems and all of that. But Wall Street, hedge funds, private equity paid attention. Now we have American Homes for Rent, Invitation Homes, right? We have entire businesses now functioning in this market. So, A, his opinion was right. B, I think he was looking at that as, hey, these folks are going to become forced sellers or sellers of any kind, and that's going to drop the market. I believe the exact opposite is true. They're actually the floor. So what happened just like over the weekend, I read an article about Lennar selling 5,000 brand new homes to private equity. They're going to buy and hold. We heard about Goldman Sachs, or maybe it was JP Morgan. I forget which one.
It was
Coming in
JP
with,
Morgan we did last week. Yep.
yeah, another $1 billion. So again, unfortunately, people are looking at these institutional contributors as becoming sellers, and that's just not who they are. Now, when people get these questions, they also could be thinking about iBuyers. I don't put iBuyers in the institution category, but others might. iBuyers are going to go away. We've already seen two leave. Open Door will be closed door shortly. They destroyed a couple of markets. They will provide opportunities for folks who have buy boxes and take their shot, but they're not the country. They will hurt Phoenix. They will hurt Vegas. They will hurt Austin, Sacramento, and a few others, but that's not the country. So net, I think institutional buyers are here to stay. They have a proven business model. They also, over the last 24 months, they're exiting the older stuff and they're moving into new stuff, i.e. buying 5,000 homes directly from Lennar. So no, I don't think they're not going to be the reason for the decline. In fact, I think they're the reason for the floor.
So it's funny how my two follow-up questions that I had planned was to bring up how JP Morgan, we did the video last week, is buying $1 billion. And then my next thing was going to be to ask you if iBuyers count as institutional investors. But seeing as you so eloquently answered both of those already, I guess we just have to move on to the next topic.
That's good. I'm sorry.
No, it's all right. Just stealing my thunder. Okay, picking a market. Albus asks, he says, hey, Mike, I really enjoy your channel. Do you know of any resources that we can look to help find the best markets? I've been looking in Indianapolis and I can't seem to find any great cash flow deals. I wrote a few offers, but they were all rejected. I'm trying to find the best market for cash flow these days. Any suggestions?
Yeah, see, this is a question that makes me nervous. I don't know how to answer there's so many things that come to mind. I think there's a lot of new investors that call themselves investors and all they do is bounce around the country looking for the best market. They're looking for the 7 or 8 economic statistics that make a market great. And I believe that's a fool's errand. I believe that's a waste of time. I believe there are investors making money in every market. You need to find a market that fits you. And, you're an out-of-state investor. I invest, relatively close to home. You have to have infrastructure support. I believe if you're going to invest out of the area, you need to have a trusted resource who's going to tell you the bad news. I have seen many, many people find the greatest of great market, but they don't have the infrastructure or the investments, and it just goes south. Wrong team, no double checking, no scale. You can go broke in a great market. So what I teach and talk about is learning the skill of learning a market. Go get a buy box, look at it every day, spend 90 days, learn average, and then write great offers. So no, I don't talk about what are the 5 stats I use to look at markets. I think it's a fool's errand. I think people need to have a skill. And I can teach the skill. There are thousands of people now learning the skill. Second thing, kind of the comma in that video I want to respond to. He says he wrote a couple of offers in Indianapolis and they've been all rejected. I wrote hundreds of offers for 3 years and got nothing. So a couple of offers, step up, keep going. You're hundreds away from, getting any sympathy from me.
Yeah, so I think it's interesting. A lot of people look to go out of state because they recognize that wherever they're currently living is probably very expensive. To them, it seems like it's a market that they can't be successful in. And maybe it isn't. There are some markets where it just doesn't make sense from a cash flow perspective. But when you think about picking an out of state market, the first thing that you should focus on is not what cash flows best. Absolutely not. The first thing you need to focus on is your network, is your team. So I got an opportunity to meet Mike's team in Fresno at his event that he held a few weeks ago. He kind of blended his YouTube family of people and his Fresno family of people. We all got together. And I'll tell you, when Mike makes the comment that you need to make sure that your team is so loyal to you and there's such a strong relationship and friendship that these people would show up at your funeral, every single person in Mike's Fresno team loves Mike, respects Mike, would be there at his funeral, watches his channel. And that's how you become successful in any market. In every market in the country, whether it's Indianapolis, Fresno, Seattle, there's people who are investing successfully and unsuccessfully. So you just need to pick the successful people, copy what they're doing, and you can make things work in just about any market that there is. So I would not focus on cash flow first.
Yeah. And again, I think a lot of new investors trick themselves saying, hey, I'm an investor because I'm looking for a market, and they spend 3 or 4 years and they do nothing. Learn the skill of learning a market, figure out average, write great offers. It's that simple, but people want to convince themselves otherwise.
Okay, Jeff M on how to set rental rates. So he had an interesting question. It was long. I had to abbreviate it, Jeff. So if you watch this, don't hate on it too much. All right. He goes, I know that each deal depends on cash flow and the terms of your deal's financing, because you obviously can't drop the rent and create an alligator. And it seems like these investment companies can't even fill vacancies. But what is the best way to actually get the rent at the price that you need for the deal to cash flow?
I actually think that is backwards or an incomplete thought. You're not going to get a rental rate on a unit that makes your unit cash flow. You're going to get market rents or maybe slightly below market rents. So it's not, hey, I got a deal and I need this cash flow to get my great yield. No, it's you need to understand market rents. And hey, if these companies aren't renting things at 1,500, well, guess what? Market's not 1,500, it's 1,350 or whatever it is. So don't fight the market. In fact, that's one of the things that a lot of people will learn when they get to their first unit. Hey, they get all excited, they close the deal, they expect to get 1,500. They rent, they clean it up, they lease it. Oh, shoot, 1,495. Nobody showed up. 1,475, 1,450. Oh, I got somebody at 14 and a quarter. It didn't work. Well, guess what? The actual rent was 1,395, not 1,495. So now your yield's all messed up. But those are all part of the lessons learned. You need to be conservative going in. A lot of folks are over optimistic. My house is cute. They don't understand. It's near this, near that. It's not emotional for a renter. They're not owning it. It's, don't do that. I would tell any new investor, don't beat up your spreadsheet, and that includes don't maximize rent. Because if you maximize rent going in, your only surprise is down. What if you went into a deal, you think market rent's 1,500, and you ran the numbers at 1375 and then you got 1450. Well, guess what? Your yield's higher. So
An
don't
easy win.
maximize the rent. Yeah.
Yeah, and I think where I see a lot of this manipulating the spreadsheet or massaging the spreadsheet happens a lot in the short-term rental market. Well, maybe if I can just get it rented for 23 days a month instead of an average of 20, and maybe I can just get a little bit extra in the cleaning fee and a little bit more per night. If you're having to talk yourself into this, it's not going to work out for you. You want to estimate conservatively on the low end. And if your deal works, taking the lowest possible estimations, the worst case scenarios, like Mike said, when you get the surprise higher rent, then your deal is just that much better. Mm-hmm. Okay, lawsuits. All right. So Abdu Isa says, hey, Mike, listening to a Bigger Pockets and the guy was talking about buy boxes. Is this trademark infringement? And that actually made me think, Mike, I think you are the progenitor of the term buy box, right? It did come from you.
Yeah, I had not heard of it anywhere. It came to me, in one of the first 1,000 videos we did on the channel. It's just like bolt of lightning. Mm-hmm. But yeah, I don't care. Anybody can use it. I am trademarking. I am paying big money to get one rental at a time trademarked. Nice. But that's it. It's a pretty big expense, rather in depth. In fact, it's been going on over a year, the process and review and all of this. But no, anybody can use buy box. Go nuts. If you gave me credit, that'd be great, but not required.
I do hear it more and more on other channels from other investors. So it is taking over, and one day might be as popular as House Hack.
I love it. I would love that. I would love
that. Okay, a little bit of doom and gloom. So Trader Tom says, Mike, with all due respect, you are delusional. If you think most people are going to go, oh yeah, this doom and gloom stuff is a bunch of crap. He's referring to YouTube videos that are doom and gloom. I need to grow up. I need to take responsibility for my life. Look, people want to be given excuses. They want to hear that it's not their fault for their condition in life. It's the system or some other guy or some other country or politician, whatever. The fact is, most people aren't ever going to succeed. They'd rather drink beer, watch football, and complain. All you can do is help those who have found success anyway, and you guys do a very good job at that. So he was actually pro you. It was just a little bit of teaser at the beginning. But what do you think? I know you talk all the time about auditing your network and auditing what you consume so that you can maintain a positive outset. But what do you think about what Trader Tom here said?
So first off, he's absolutely right. But so again, I want to talk about it. This is my first thought. He's absolutely right, but I don't care. It's like, well, how does that work? My job is to play at the margins, right? There's a certain set of people that are attracted to my message and will do the work and are doing the work. That's awesome. I feel good about that. Then there's a set of people that live in their mom's basement, talk doom and gloom. I will never reach them. Got it. I'm worried about the people in the middle. I believe personally, consistency, different voices, different stories. If I can successfully pull 5, 7, 8, 9% of those people out of the middle, I win. I am not interested in only helping the easy folks. I understand there's a bunch of idiots who live in their mom's basement who wouldn't know a good deal of it, was in front of them. Mm-hmm. I want to play with the people in the middle. If I can convert 10, 20, half of them to us, dude, that's game changing. Right. And again, I know it's game changing because I get notes almost every day. You have changed my life. That's why I do what I do. I love those notes. If you want to send one, DM me, send me a picture, book selfies. I love them all.
In terms of changing people's lives, the ability to connect people to each other. Because of you, I met my mentor and invested in Gary, Indiana. Because of you, I met Dion, and now I hang out with Dion. Because of Dion and you, I met Cody and Christian. I'm now staying the night in Cody and Christian's resort because I spoke at one of their events yesterday. Because of you, I met Matt, the lumberjack landlord, who I went and visited in New Hampshire a few weeks ago and learned a whole bunch from. I mean, it's just this like umbrella of the one rental at a time family that everybody is underneath, connects and networks with. Yeah, I mean, you can join to be a part of the club.
Let's play that one further. Because of you, we are taking the 8-hour mastermind session, chunking it up into 12 or 15-minute sessions and giving it away for free as a part of the course, right? That, believe me, that doesn't happen if I have to do it. This just doesn't happen. It's like, whoops, that's gone. But no, I mean, one rental at a time attracts a certain person. We weed out bad, evil, whatever. The Facebook group, which you're a part of, is awesome. Mm-hmm. The tribe. One of the things that I look forward to is one rental at a time right now is on the cusp. Like Amy, I think you are part of Amy's Zoom call from the Bay Area. Mm-hmm.
Yep.
We're right on the cusp of having little one rental at a time tribes in different locations. You know, I think by this time next year, when we hopefully double again, that'll be game changing. When we got
Right.
like little tribes of 25 or 40 in different markets, and they're all doing weekly Zoom calls, and
Yep.
maybe there's, 10 folks like you and Lumberjack and Dion and, my other and we just jump into different ones across the country just to have fun. And yeah, this one retail at a time thing is going to change lives, and it already is. And the momentum is like right on the cusp of really picking up. So I can see it. It's just got to keep going.
We've rolled the boulder up to the edge of the cliff. We're ready for that push.
Come on, Matt, step up. You're the big guy. You push that damn thing.
Exactly, right? Yes.
I'm tired. Somebody else.
Okay. The topic, the numbers just don't add up. So Grant McBride says, am I the only one that just can't make the numbers work? No matter how much below list price I go, I'm easily at the 1% rule, but cash flow is still negative. I must be a noob at this. Mike, help him out.
So I think there was more to that question. Didn't I reply to that one, right?
That was the whole question. You might have replied, but I don't have your reply in here.
Yeah. So I don't know. Maybe I got a couple of questions like this. So I think maybe it was a follow-up question. He basically said something like, I'm buying a home for 90 grand. It could rent for $1,000, so that's his 1% rule, and he can't get it to cash flow. To which I said, I think your math is wrong.
Right.
Right. Because again, I mean, let's just do the math here, right? So it's a $90,000 house. These were his. I mean, it could be anything. It could be $190,000 house, 190 grand. You're going to get $2,000 a month rent, because that's the 1% rule. These are not my numbers. These are his. And actually, I did the math because I remember this question. I went to my calculator and I went, what the hell is going on? So let's do it again. So this is all real-time stuff. So I'm going to type in Google search mortgage calculator. Look at that. It's right there. So again, $190,000 house. Let's assume he puts 40 grand down, because that's roughly 20%. So he's got 150K loan. Let's assume that he gets a 7% mortgage rate. We have to assume something. So his payment is $998.
Okay.
Right? So, you got $2,000 rent. You got, I don't know where he's at, insurance, taxes. That certainly should cash flow.
Yeah.
Now, it'll probably only cash flow $100, $150, but there is cash flow. So I think something's wrong in his math. And oh, by the way, let's assume you didn't put 20% down. Let's assume you put 30% down, because what's the cure for cash flow? More down.
Right.
And now your payment's $865. So again, I don't know his math. When I read that question and I replied, I think his math is wrong. Something's broken in his yield calculation. Because if you put 30% down and you have 1% rule, it has to cash flow. I don't know what he's doing.
Yeah, by those numbers, I was looking at it too, and I'm like, just my rough estimate is you should be making a cash flow positive $400 a month. And then to take it one step further, of course, you're going to want to divide your yearly cash flow by whatever you put into the deal. But it looks like it should definitely be a positively cash flowing number. So, in all fairness, my friend, let me get your name one more time real quick. Grant McBride, maybe you are a bit of a noob. Maybe you have just started out and you're just still learning how to run the numbers. That's fine. Everybody's there. And Mike has videos that will teach you how to run the numbers on a rental. And maybe you just need to find that video and step by step do it. Because it literally, I'm a cop, man. I got all season math. You easily could have just hit the wrong button on the calculator.
Yeah, I mean, Excel spreadsheets are tricky. Sometimes you're dividing in this or that. I mean, I don't know, right? I have no, that's one of the reasons I use such a simple spreadsheet. And that's why I teach a simple spreadsheet, because you have Excel gurus who go nuts. And then you have some people like, how do I move cells?
Yeah.
So when you
Grant, just get the course.
Buy the course. It's that again. What do I teach? It's all about the spreadsheet. It's all about yield. If you have a 1% deal, which was what he said in his question, it should cash flow.
Yeah, it should get pretty darn close at least.
Yeah, at least. I mean, but yeah.
Okay, a couple more questions. So this one is from a fan favorite commenter. It's about treasury rates and mortgage bonds. So All Nighter Hider, one of our biggest fans, he says, question, why do 30-year mortgage rates reflect the 10-year treasury and not the 30-year treasury rate? Is this a planned wealth transfer incentive for those willing to do the work?
Oh, I love that last part. So basically, what a lot of people don't understand. Because first off, logically speaking, he's right, right? 30-year mortgage, I should look at the 30-year bond. Makes total sense. However, after hundreds of years of mortgages, the average tenure of a mortgage is 8 years. Since the average holder holds it 8 years, hence the 10-year is a much bigger. Banks use the 10-year because the average person is refied or sold the home in 8 years. That's the simple answer of why the 10 years influences the mortgage rate and not the 30-year. It's because average 10 years, 8 years.
Interesting. Okay. Yeah. And you know what? That was a good question. He's a smart dude. He spends a lot of time watching economists on YouTube. And I thought the same thing. I was like, you know what?
I like him. He said hi at the event.
Yep. I like him. Okay. Last question, but we need a little context. So Mike, you closed on 2 new deals. Can you tell us about those real quick?
Yeah. So 2 deals out of the MLS. Again, what I want people to hear here is I look at my market every day. I do what I say and I do what I teach. I looked at my market every day for 3 years, wrote hundreds of offers, got nothing. In the last 6 weeks, I've closed 2 deals out of the MLS. The first one closed 6 or 7 weeks ago. It's going to be listed as a flip on Tuesday. So we're already exiting the process. I think it was listed for 270. We bought for 203. We're going to list it at 309. I think I'm about 40K in. I will give all the numbers once it's done. The second one I just closed on, I think it officially closed Wednesday of last week. It was listed at 259. We got it for 175. My team goes in Tuesday after the other one's done. It goes in Tuesday to start working on that one. And yeah, again, I do walkthrough videos. I will obviously give all the numbers once done. I'm trying to lead by example. So I have a playlist called Property Walkthroughs. You can see it. I try to get a video every other day, and you can watch it evolve, and you can ask questions. And yeah, dude. 2 deals out of the MLS. So I love the fact that everybody's scared and Crash Bro. Dude, I should send Crash Bros some money or something because they're going to give Olivia and I don't know, somewhere between 100 and 400 grand next year because they're scaring everybody. So I should send them a thank you card.
Well, speaking of cards, that leads us to the question, which comes from FJUWANA. So Fujwana, I don't know if that's a name or just some random letters, but they said, congrats on your 2 new deals, Mike. Do you reward yourself with a postcard too?
I remember that question. Man, you guys are awesome. The answer is no. I don't self-deal. Yeah, I don't. But that's a great question. No, but yeah, I don't self-deal. But yeah, that's funny. That made me laugh.
You have to be a new investor or someone not part of the one rental at a time, immediate friends or family to get the cards. So.
Olivia and I don't count.
So Mike, that was all the questions I had for this week. Remember, we do have a bunch of videos we're going to react to that we're going to jump right into next. Those will get uploaded over the next couple of days. We're looking at stuff from, again, Thatch Win, sorry about that. Thatch Win, Chandler David Smith, and a new guy called Loans by JB.
Very cool. I look forward to it. Thanks, bud.